Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond at the Contrarian Trader. What we're going to do today is go over the pre-market activity. We'll go over a couple of symbols that our members submitted for me to review on video. And then members, what we're going to do is we're going to do a quick morning update. That's where we'll review some of the observations made on a weekly basis. We are now into Thursday. We are past hump day. I want to take a look at the markets on a weekly view and then do a review of our positions. So let's get to it. It is at current 5:05 in the a.m. Eastern Standard Time. We're looking at the S&P 500, which is down slightly this morning. What we're looking for here is a continuation move higher, and we have resistance above at 27.27. We have a rising 20-period moving average. These are all 4-hour charts. A rising 20-period moving average, which should act as a floor. Once it stops acting as a floor, get concerned about the S&P. But right now, the path of least resistance remains to the upside. Here's Monday when we first started talking about a potential breakout of this bull flag formation on the S&P 500. So short term, we're setting up nicely for a continuation move higher. The Dow Jones, very similar setup here, down very slightly in the pre-market. We had a breakout point failure over last night, meaning that yesterday afternoon we broke out and closed above this resistance level, came back and retested it once, came back and retested it twice, and failed overnight. So now we're trying to recapture that support level. So jury is out. We're still trading above the 20-period moving average. It's acting as a rising floor. But a bit of a caution flag is on the track given this bear trap overnight. But again, this is a 4-hour chart, more volatile than a daily chart. We move on. But we take note. The Nasdaq struggling a bit here to break out and struggling to hold on to this lower band of support. But the fact of the matter is that we are holding it right now. We're about flat on the morning, and we have a rising 20-period moving average. A good consolidation here and on the other major averages as well. Just keep an eye on the lower bands of support because we are finding formidable resistance above. The question is, will sellers move in ahead of the weekend and take this market off the highs of the week? And that's what we're watching, and that's what we're going to discuss this morning with members. How are the weekly charts setting up? Let's take a look at the U.S. dollar. Commodities had a very, very good day yesterday. Most of them did close off the highs of the day. Gold especially. Silver did really well. And I believe silver, we'll go to that chart in a moment, has a new higher high today. So it really ripped higher. We are long of silver. Now the dollar on this 4-hour chart broke out, pulled back, retested, rallied, pulled back, retested again, and appears poised to want to break out. But that's on a 4-hour chart. The higher level view charts, the weekly charts, the daily charts aren't as bullish as what the 4-hour chart looks like. So that's why when we trade off of a 4-hour chart, we want to pull back and make sure that if we have a bullish 4-hour chart, we want to make sure that we have a somewhat bullish daily and hopefully a weekly chart as well. So if the dollar continues to rally, then you can expect pressure on gold in particular. Let's check out gold. But of late, gold has been not as negatively correlated with the dollar. And in fact, we're up slightly this morning as we near a breakout of this major resistance level. As you can see here, we're really flirting with it now. Just to illustrate, take a look at on a weekly chart, the significance of this resistance level. We are at critical resistance levels, and if we break out and close above this upper band of resistance, it's going to be a major, major bull run for gold. But we have to get through these sellers above, and this is a very manipulated market. They're desperately trying to keep gold down. Gold is a competitor to the US dollar. Back to the 4-hour chart. Let's check out silver. Now, silver really went on a tear yesterday. Today, we have a new daily high. We've pulled back off that high, but still looking good. You can see that platinum, it's moving higher as well. Palladium, moving higher as well. Really ripping here on palladium. So the markets are sending us a signal. We're seeing money rotate into the precious metal space. Let's check out oil, because it's not just the metals that are doing well. Oil on a tear. A significant breakout above the 72.88 level, and it appears as though we're going higher. Let's get to our member stock chart request. This is where I review the symbols that our members submit for me to review on video. The first chart up is Continental Inc., KMT, weekly chart. This is really the only chart that you need. We are in a downtrend. We need to close back above $42 per share. And right now we're struggling with the 50-period moving average at 41.47. Or we need to get a pullback and a higher low put in, or a retest of 38.02. And then a continuation breakout. But as it stands right now, I would not be a buyer of these shares. And if they break down below 38.02, they could come all the way back down and retest support down at $36 to $35 per share. Daily chart. Yeah, so it looks as though we have a dead cat bounce off of an oversold condition. Could there be more upside here? Sure. Rising Stokes, rising RSI. So it's got short-term momentum. The question is, can we get through all of this overhead supply and resistance on volume, which is dropping off? So I would avoid these shares to the long side. The time isn't right yet. I would avoid. Now, if volume picks up and we start trading above the 50 and 200-day moving averages, then it's a different story. We'll revisit it. I wouldn't short yet. I would wait for a failure to hold this uptrend channel, very short-term uptrend channel. But remember this volume here, very, very light up volume. Amazon, weekly chart. What can you say? As it stands right now, on a weekly basis, the shares are performing very well, up 6.78% on the week. We have cleared resistance so far. The week isn't over. If by 4 p.m. Eastern Standard Time Friday, we close above resistance at 1500, which is a psychological level as well, the probability of us making new higher highs in the coming weeks is very good. Now, if we fail to close above this resistance level, that's a tell. That could spell problems for Amazon, but we're not there yet. The weekly chart is looking bullish. Daily chart. So yesterday, we closed at a resistance level at 1525, actually 1527. How's our volume? Volume has been light, but rising the past couple of days, but not serious buying. So at these levels, I wouldn't be a buyer because we're so close to Friday and watching how the shares close on a weekly basis. I would be a buyer of Amazon shares should we manage to close above resistance here, scratch the itch, open up a position to the long side. And if we close out the week above weekly support, well, then I may add more to that position and then buy on strength, and especially if we break out to new all-time highs. Now, if we pull back on the week and we close back down below the 1500 level, or better yet, the 1455 level, then I would look to open up a short position on Amazon as a speculative bet, probably using put options. Maybe a bear put spread. That's it for stock charts this morning, folks. What we're going to do now is we're going to segue into morning update with members. If you're not currently a member, sign up. If you're watching this on YouTube, give me a like, give me a follow, leave a comment. You know the deal. If you're watching this on the website, enter your email address. We hate spam too. Everybody have a profitable trading day. Members, let's get to a quick morning update. Folks, let's take a look at a couple of weekly charts. The Dow Transports, while they had a weak Tuesday, they had a strong